Hello and welcome to Upstack America's Oracle EBS Financials Functional Training. My name is Bob and I'm the lead senior consultant for Upstack America. And with me today I have Victor, who is also a senior consultant. And today we are handling lesson 7 of the fixed assets module. And Victor, please walk us through.
Thanks, Bob, for the introduction. Welcome everybody to this session in our Financials Functional Training series. This session, we are still looking at setup steps, and we are going to take care of book controls. In our previous session, we looked at the first two, which actually we saw are related. We did the system controls, whereby what we had to fill out were the flex fields that we had created. The asset key, the location, and the asset category. So those are the ones we went out and filled in the system controls. Okay. So now we are at book controls, and we are going to do more kind of the same thing. In the book control, there are a couple of things that we have to define there. All right. And in order to do that, we have to create some of those things, okay? So when we go to book controls, and this is the navigation that I've shown there, you will see fields that will require you to enter this information, okay? Some of the information you'll have to enter there will be the ledger, where this corporate book will be sending the entries, okay? You'll also have to enter fiscal year and the name of that fiscal year. Don't worry about some of these concepts. We'll discuss them and their significance. You'll also specify a depreciation calendar. You'll also be asked to specify a prorate calendar, which is related to prorate convention, and we are going to discuss how that is. Okay. So in order to do our book controls, we have to have these features already defined so that we can now go and fill them up in that field. So just so that you can have a clearer understanding, let me show you this. Let's follow this navigation and go to Oracle. Let me make sure this is a current session. So I log in as Fixed Assets Manager. And if you go to Setup, then maybe I passed it. Setup, Asset System, then Book Controls. This is what you get. So this is some of the information you have to enter, okay? The name of the book, the ledger, depreciation calendar, prorate calendar, current period. You have this option to say divide depreciation, how to divide depreciation, okay? So these are some of the things we have to enter. So in order to enter anything, we have to have these features defined. We have to have a ledger, a depreciation calendar, a prorate calendar, okay? So that's what we want to talk about. So now, in order to understand the significance of these items, we are going to start by looking at how depreciation is calculated. And once we understand that, we are going to see what role each of these features play in calculating depreciation. Okay, and basically what their function is and why we have to define them and how we are going to define them the way we are going to define them, okay? So let's start. We know what depreciation is. We have talked about it a lot now up to this point in our sessions for FA, and we said we calculate depreciation for capitalized assets. Okay, so instead of incurring the cost of that asset in one period when that asset was acquired, we expense out that cost over the useful life of that particular asset. Okay, so for example, if we bought a desktop computer for $6,000 and we know it's going to be used for 5 years, right? If we're using a method which is straight line, we can expense out that laptop over the 5 years, whereby we do 6,000 divided by 5, assuming that laptop has no salvage value. We get 1,200 per year, and then we can calculate the expense per period by dividing by the number of periods in the year. Okay, so 1,200, for example, divided by 12 periods. If the period is a month, then we'll get a depreciation expense of 100. So that depreciation expense of 100, when you're generating your financial reports at the close of every period, will go to your expense section in your income statement, right? Your income statement will show your revenue and your expenses. So that depreciation expense for that period will go to that section of expenses on your income statement. So we know what depreciation is, basically, is what I was saying, okay? Based on that, what we know about depreciation, so there's another thing that we need to know. When Oracle is calculating depreciation, the depreciation is calculated annually, okay? So the first value that is calculated is the annual depreciation, and then from there, Oracle will obtain the periodic depreciation. So looking at this slide, we can see this is how depreciation is calculated. So you input this information when you're entering an asset in FA or in your books, in your corporate books, okay? You'll have the original cost of that asset. You'll have salvage value if that exists, or if it is going to have a salvage value. You'll also have its useful life, okay? Based on this information will be subjected to whatever depreciation method you will have you'll have associated with that asset, and this can come down from based on the category of this particular asset. Okay, so based on the depreciation method whose information you will enter when you're creating that category, then you'll get the annual depreciation. So for example, in our case, the information that we have for our laptop is the original cost is 6,000. We are assuming it has no salvage value. So, and then the useful life is going to be 5 years. Okay. So that's the input. We can say that's the information we input. Then we have said the depreciation method we have specified is a straight line method. So we are dividing that value, original cost, equally through the useful life, the 5 years. That's how we get the 1,200. And that is the annual depreciation. And you can have these other different types depreciation methods, okay? Double declining some of the years, so depending on the asset. So the takeaway from this slide is that Oracle calculates depreciation annually, okay? So the first value that is obtained from this depreciation calculation is the annual depreciation. So what's the next step? To get the periodic depreciation expense, then Oracle will divide the annual depreciation by the number of periods. Okay? So it's calculated the depreciation for 1 year, all right? But we are running our reports periodically every month in our case, where the period for our year is the month, okay? So we are running depreciation expense for every month. So in order to come to that value for monthly depreciation expense, Oracle will then divide the annual depreciation, which it obtained here, by the number of periods to get the periodic depreciation expense. So in order to do that, Oracle needs to know the number of periods in our calendar or in our financial year, so that it can know what number to divide this annual depreciation by. And that is where the depreciation calendar comes in, right? So the depreciation calendar is what will tell Oracle how many periods are there in the year, and therefore how it will divide this annual depreciation. So in our case, we will have 12 periods in our year. So if we're using the example of the laptop, it will be 6,000 divided by useful life, which is 1,200. That's the annual depreciation. So the periodic depreciation will be 1,200 divided by 12, which is the number of periods in the year. So we'll get 100 periodic expense, depreciation expense, okay? So let's continue. Calculating depreciation expense for the period, apart from the depreciation calendar, it is also based on other two things. So in total, depreciation expense for the month or for the period is based on these three things: the depreciation calendar, the prorate calendar, and the prorate convention. Okay? Which those two, the prorate calendar and the convention, are related in a way, and we are going to discuss that, okay? So apart from the depreciation calendar, we have the prorate calendar and the prorate convention. So what is the purpose of these features in the calculation of depreciation? So we know the depreciation calendar will tell Oracle how many periods are in the year. Now, one thing we're going to see about the depreciation calendar is when you're creating it, it has to match your GL calendar, the calendar that we created when we were creating our chart when we were creating our ledger. Which means it has to have the same number of periods per year. The periods have to match, okay? And so do the date ranges and the period names. So remember, the periods have names like January 19th, January or February 19th. So all those have to match. So the depreciation calendar is basically like a copy of our GL calendar. That's how we are able to specify the number of periods in the year, okay? So the purpose of the depreciation calendar is to tell Oracle how many periods are in our year, so that we can get the depreciation expense for each month. So what's the purpose of the prorate calendar and convention? So the purpose of these two comes in calculating the depreciation for the first and the last years of an asset's life. Why is that important? The reason why that is important is because assets will be acquired at any time during the year, right? So you don't wait for a particular date, for example, like January 1st, so you can start acquiring your assets and placing them in service. Assets will be acquired as the company has planned, or maybe even some as need determines, okay? So what is the implication of that? The implication of that is that assets will come into service at different times in the year, and therefore we have to know how much depreciation to calculate for that first year in the asset's useful life, and also the last year, because they will also come out of service. They will be retired at different points in the year, okay? So for example, if our financial year runs from January to December, therefore it's a calendar year, we can acquire assets in January or February or any month of that year, okay? So if that asset is acquired in March, how are we going to calculate the depreciation expense for that first year? Are we going to start from the first period, from the first day of March, or are we going to start from the actual day in March when that asset was acquired, or are we going to start in the next period? So if the asset was acquired in March, we are going to start calculating expense in April. So that is what the prorate calendar and prorate convention help us to do. The way you can think about it, it's the same kind of problem as if you fire an employee, for example. So if you fire them, for example, in the middle of the month, are you going to pay them for that whole month, or are you going to pay them up to the day when they're terminated? It's the same kind of problem that we are trying to solve, okay? So depreciation calendar will help us in knowing the number of periods in the financial year, thereby calculating the expense for each period. But prorate calendar and convention will help us to know when to start calculating expenses. The depreciation expenses based on when the asset was placed in service. Okay? So we've already said this about the depreciation calendar. Now we are looking at these three items, okay? So we have already talked about the depreciation calendar, and we said it matches the GL calendar. And the way we define it is basically it shows the number of periods. So if for hours, the Mascani one, for example, will be January to December, 12 periods. And it will also show the date ranges for the periods. For January, for example, it will show that January 2018 runs from 1st of January 2018 to 31st of January 2018. And this is important for a particular reason, which takes us back a bit, but it's going to be easy to comprehend. So remember this field here when I was showing you the things we need to do for book controls. This field asks you to divide depreciation evenly or by days, okay? So after Oracle has calculated the annual depreciation, we have said it divides by the number of periods in the year to get the periodic depreciation, okay? Expense. However, you can ask Oracle either to divide that annual depreciation evenly among the number of periods. So a simple calculation, for example, in our case, 1200 divided by 12 to get 100 per month, or you can ask it to base on the number of days in each period. So January, for example, has 31 days, February will have 28. So January's expense should be greater than February's expense, okay? And that is why we have these date ranges showing the number of days for each period. So this is what a depreciation calendar would look like, right? So January 2018 is the period, and it ranges from January 1st, 2018 to 31st January 2018. So it basically looks like our GL calendar. So now let's go to prorate convention. We have said prorate convention and prorate calendar help us to know when to start calculating the depreciation expense based on the date placed in service. So this is what this slide explains. Prorate convention tells Oracle when to start calculating depreciation expense, or the other way to look at it is how much depreciation to take in the first and last years of the asset's useful life. So what prorate convention is, it is just like a calendar, but it contains date ranges and a prorate date. Okay. Prorate conventions are defined by the regulators, okay, or the responsible agencies, like maybe the IRS. And depending on the various assets, and these prorate conventions maybe will differ based on the various assets, and so they will be also different based on the jurisdictions, like the countries or whatever areas. Okay. So these ones are provided by the regulators. So depending on your asset, you will have to determine, the accountants are the ones who are going to be experts on this. They are the ones who are going to determine which prorate convention will be used for a particular asset. So just to go back or to repeat, it tells us when we are going to start calculating the depreciation expense. So let me give that example again. Our financial year runs according to the calendar year, so it's January to December. You can have your year running, being a fiscal year, whereby it runs from one calendar year to the next, okay? So maybe like June to May. So a company will acquire assets at any time during the financial year, right? We are calculating depreciation expense for each period in our financial year. So depending on when we acquire the asset, we need to know when we are going to start calculating the depreciation expense for that asset, and that is going to be given to us by the convention. And we have said this convention is provided by regulators, so the accountants will be experts on this, and they will know which convention to use for a particular asset. So examples of conventions are like half-year convention, mid-quarter convention, current month convention, mid-month convention, okay? And each of these dictate when to start calculating depreciation expense for assets, or as we have said, the other way to put it is how much depreciation to take in the asset's first and last years of their useful life. So this is what you can imagine a convention looking like. So for example, for the current month convention, we said a convention will have date ranges and a prorate date. So the date range could be January up to 1st January 2018 up to 31st January 2018. This is 2018, sorry for that mistake. And the prorate date for this is 31st January 2018. So what is the purpose of this, or how does the convention work? We know that it tells us when to start but how does it actually work? So that function is fulfilled by the prorate date. So what happens is this. An asset will have a date placed in service. Okay? So that date placed in service will fall within a range somewhere. Okay? So those are those ranges which are defined here, these date ranges. For example, if an asset was placed in service on 13th January, okay, then that date placed in service ranges here between 01 January and 31st January. So you can view that date placed in service as the input. So when you input that date placed in service to your convention will give you a prorate date. So the prorate date for that particular asset will be 31st January 2018. Okay? So basically what the convention does, the convention uses the date placed in service, which you specify for your asset, to obtain the prorate date. Okay? What does the system then do with the prorate date? The system will check when this date, which period this date belongs to, the prorate date that it has obtained. Okay? So for example, this date, 31st January 2018, belongs to which period? It belongs to January 2018 period. With that information, the system will know that it will start calculating depreciation expense from January 2018. Okay? Another example, if the date placed in service for a particular asset is February 17th, so you input that date placed in service, you input it, and according to your convention, the prorate date is 28th February. So using this prorate date, the system will know when to start calculating the depreciation. In this example, I'm assuming that the convention we are using is current month, and I know we haven't discussed how current month convention works, but bear with me, we are going to understand. So if the prorate date is 28th February, the system will know that it should start calculating depreciation expense from February. Okay? So assuming those are two different assets that we acquired, and they're assets of the same category, right? The same kind of asset. So we acquired maybe a laptop, one laptop in January and the other one in February of 2018. Same kind of asset, same depreciation method, same convention. So for those two assets, the amount of depreciation expense calculated in the year 2018 will be different, because one will have started from January and the other one will have started from February. Okay? However, of course, this will be made up in the last year of the asset's life, because if the asset's useful life is 5 years, then we can assume that this one will go 5 years up to the end of 2023 in January, and this one will go up to the end of up to January 2023, and the second asset will go up to February 2023. So for the last year of the asset's life, the second asset will have more depreciation and the first asset will have less depreciation. So it all cancels out. So what about half-year convention? What would it look like? You can assume it looking like this, whereby it says that for these date ranges, which is the whole financial year, from January 2018. I don't know why I'm using 1 here. From January 2018 up to December 2018, right? The prorate date should be 1st July 2018. So what does that mean? If you add an asset in February 15th, right? You enter the date placed in service as February 15th, 2018. According to your convention, the prorate date is July 1st, 2018. System will go and look at which period July 1st belongs to. So let's say it belongs to the period of July, right? So the asset will start calculating expenses from July up to the end of that year. That's for an asset you placed in service in February. What about for one you placed in service in September? It will be the same because the prorate date produced will be the same. So for all the assets, the same amount of depreciation will be calculated for the first year, and consequently the same amount of depreciation will be calculated for the last year. Okay, so it all adds up or cancels out. So I know I've already given many examples in words, but let's look at a scenario now so that we can fully understand prorate convention. The other thing I want to mention is, I know we said there's prorate convention and there's prorate calendar. We're going to talk about where prorate calendar falls. But just think of it this way. Where is the system checking which period this date belongs to? We have said that once you enter your date placed in service, then it will check it against the convention and the date ranges and come up with a prorate date. Then using that prorate date, it will check what period this date belongs to, the prorate date. So where is it checking which period this date belongs to? It has to be checking it from some calendar, right? So that calendar is the prorate calendar. And we are going to talk about it as soon as we are done with the prorate convention. So let's look at this scenario. We have a desktop computer, and this is the information about it, okay? So original cost, $7,000. Salvage value, $1,000. Let's say useful life is 5 years. The depreciation method we are going to use is straight line method. And the date placed in service is 11th March 2018. So in order to calculate the annual depreciation, what are we going to do? We have this information. So the original cost is 7,000. Expected salvage value is 1,000. So the depreciable amount is 7,000 minus 1,000, which is 6,000. Useful life is 5 years, and we are using straight line depreciation method. So we divide that amount equally to get 1,200 annual depreciation. Okay, so for the 5 years it's going to be in use, we are going to expense out 1,200 out from the original cost every year. But that's annual depreciation. Okay. Now, this asset was placed in service on 11th March 2018. Okay. So supposing based on this type of asset, the convention that is supposed to be used is half-year convention. All right. We already have the annual depreciation expense, but we know for the first year, this asset wasn't in service for the whole year, starting January, because our financial year runs from January to December. Okay. So based on the half-year convention, how are we going to calculate the depreciation expense for the first year? So if our convention looks like this, whereby the prorate date, regardless of the date placed in service, is 1st July 2018, so the system is going to say, well, 1st July belongs to the period of July 2018. So I'm going to start calculating depreciation from July 2018. Well, it should have been August, I believe, of July, yeah. So 6 months, all right? So starting July 2018 is 6 months. Let's say that's half the year, all right? So the depreciation expense for the first year is going to be 600. All right. Now, based on this 600, now, based on the number of periods, will be divided to get the monthly periodic expense. Okay. So it will be 600 divided by the number of periods, which is 6 to get 100 per month. Okay. So by combining the depreciation calendar, the prorate convention, and the prorate calendar, we have obtained what? The monthly depreciation expense, okay, and the depreciation expense for the first year of the asset's life. In this case, because of the half-year convention, it is 600, and consequently, for the last year, it's also going to be 600. Now, for the last year, we can assume that this asset will be retired on 10th March 2023, right? That will make exactly 5 years. So even for that last year, the depreciation expense will be 600, okay? And when you add 600 plus 600, you get 1200. That's the depreciation expense for 1 year, plus now the 4 years in between, 2019, 2020, 2021, and 2022. That's 4 years, okay? So the total comes up to the 6,000. What about if we are using the current month convention? The financial information is the same, including the date placed in service. But using the current month convention, which looks like this, we'll enter this date placed in service, all right? So according to a convention, the date placed in service will produce what prorate date? The prorate date produced will be 31st March, because that date placed in service falls in this range. So the prorate date is 31st March. Therefore, the system will know to start calculating depreciation from the month of March, because this date belongs to the month of March. And true to the name of the convention, March is that current date, the actual date when the system, the asset was acquired or placed in service. So what will the calculations look like? So the system will calculate depreciation starting March. So from March through to all the periods in that financial year. So March 2018 through to December 2018, and that's 10 periods, okay? And we know that the periodic expense is 100, because it's 1200 divided by the number of periods, which we got from our depreciation calendar. So 100 times 10 is 1000. So the depreciation expense calculated for the first year will be 1000. For the next year, 2019, it will be 1200. 2020, it will be 1200. 2021, 1200. 2022, another 1200. And then the last year of the asset's life, which is 2023, we assume the asset will be we say the asset will be retired in what? 10th March. Okay. So for that period, which is March, according to this convention, depreciation won't be calculated. So it will only calculate for January and February, right? Because that expense for those few days in March was also compensated at the beginning, because even though it was placed in service on 11th March, we calculated expense for the whole period of March, right? So that would be the calculation based on this current month convention. Now, finally, we have this mid-month convention. So how would this go? And this is the example that I am going to use for the segue into explaining the concept of a prorate calendar and the importance of prorate calendar, which we said is where the system checks to which period the prorate date belongs. Okay. So if we're using the mid-month convention, okay, date placed in service is 11th March. All right. Now, let me say a bit about the mid-month convention. The way we should think about this convention is we want to acquire half depreciation expense for the assets first period and half depreciation expense for the assets last period. Okay. So the date placed in service for this asset is 11th March 2018. So the way we want our expense to be calculated is that for this period, only half the depreciation expense will be calculated. So if the depreciation expense is 100 for every period, then for the first period, we want it to be 50. And for the last period, we also want it to be 50. That's just how the convention is, or what it dictates. So perhaps you are expecting me to have that this prorate date will be 15th of March. Okay, so that we can have half of the expense calculated. So let me first go to now the prorate calendar, and then we'll work our way back. Okay. The prorate calendar, it can be similar to the depreciation calendar, or it can be different when we are calculating partial depreciation. For example, in our case where we are having the mid-month convention. Okay. So the prorate calendar can look like this, and the prorate calendar is also just showing the periods and the date ranges for those periods. All right. The prorate calendar can look like this, just like the normal, how the depreciation calendar would look like. Or it can look something like this. And this is the prorate calendar, which we are going to use with our mid-month convention. Okay. So let me explain why we say it can be similar to the depreciation calendar and it can be different. If we go back to the current month convention, all right, here it gives the date ranges and the prorate date. Okay, so we said using once the system acquires the prorate date, it goes and checks to which period this prorate date belongs. All right, this prorate date belongs to the period of January, and we said that it checks that at the prorate calendar. Now, in this case, the prorate calendar and the depreciation calendar can be the same thing, right? It works because once it checks that this date belongs to the period of January, and according to the depreciation calendar, which I have shown here, see, they look the same. It has the date ranges, which are 01 January 2018 to 31st January 2018. So that date belongs here, and that's the name of the period. So you can use your depreciation calendar as your prorate calendar, because once the system checks that the prorate date belongs here, and these are the number of days in the period, then it will be able to calculate the full depreciation expense for this particular period, if this is the first period of the asset's life. But now let's go back to mid-month convention, whereby we want to calculate the expense for just half the period, okay, in the beginning, in the first month. So if we use a prorate calendar that's similar to our depreciation calendar, like this one, all right? If we use a depreciation calendar that's the same as if we use a prorate calendar that's the same as our depreciation calendar, we won't be able to calculate half the expense for mid-month, because the prorate date will always bring up a date belonging to the whole period. All right? So this is going to be the prorate date. This is the prorate convention that we are using even for the mid-month. But the difference in the expenses that are being brought up is being brought about by using a different prorate calendar, which is now what I want to show you here. Okay? Okay, that might have been a bit confusing, but don't worry, you're going to have a clear idea by the time we are done. So now I want us to combine this prorate calendar, work under the assumption that for all the other examples, we have been using the prorate calendar being the same as the depreciation calendar. But now the prorate calendar is different because we want to use the mid-month convention. So for our asset here, if we want to do mid-month convention, this is the date placed in service. Okay? The convention that we are using, even though we are calling it mid-month, the way the date ranges and the prorate date are defined, it is as if it's for a whole month, okay? But when we combine it with this different prorate calendar, we get different results. So our asset was acquired on 11th March 2018, okay? If we put that date placed in service, our prorate convention, which is this one which we are using, will give us a prorate date of 31st March, okay? Because 11th March belongs to this range, 1st March to 31st March. So now the system will take this prorate date and go and check the prorate calendar. Now the prorate calendar we are using is this one, okay? When it checks the prorate calendar, it will see that that date belongs to this second period here, which I have defined as January number 2. So here we have our periods split into two in the prorate calendar. January has two parts, January, the first part of January and January 2. February has two parts also, and March has two parts, okay? Remember the prorate date is 31st March. So that date belongs to which period? It belongs to this particular period, March number 2. Okay? Therefore, based on this calendar, the expense calculated will be for these days, 16th March through 31st March, which is half of March. Okay? And we have achieved what we wanted to achieve, which is to calculate half depreciation expense for the first month using the mid-month convention. Okay? So our actual convention, the way it's been defined, may not fit perhaps what you would have thought mid-month convention would look like, but the combination of this convention and the prorate calendar will give us the result that we want. And to see that this is true, let's use another example. Assuming our asset was placed in service instead of 11th March, which is in the first half of the month, let's say 26th March, okay? The convention that we are using is still this one. So based on that, on this convention, the prorate date that we'll get based on the date placed in service of 28th March will still be 31st March, okay? So this prorate date, the system will go and check the prorate calendar, and it belongs to this period here, March number 2. Therefore, the depreciation that will be calculated for that first period, which is March, will be just from 16th of March through to 31st of March. So regardless of the date placed in service, in this combination of this prorate calendar and the convention that we are using, the first month will always be half depreciation expense calculated, and so will be the last month. Okay? So I know maybe that might have been a bit more confusing. I'll try and give more explanations as we continue and as we do the implementations. Perhaps it will make more sense. But we can do a quick recap just to remind ourselves where everything falls, okay? So this is what we are doing. We are doing the setup for FA. We did this first two. Now we are at the book controls. And we saw that the book controls the information that we need to enter. Some of it is the ledger, the fiscal year, which we haven't talked about yet, but we will. The depreciation calendar, prorate convention. Well, we have to enter prorate calendar, okay? So the reason why we try to understand how depreciation is calculated is so that we can better understand these new features that we are talking about. And we said that depreciation is calculated annually, but then based on the number of periods in our calendar, then the periodic expense is found by dividing that annual depreciation by the number of periods. And we said that Oracle obtains the number of periods from the depreciation calendar. But apart from the depreciation calendar, we also need the prorate calendar and convention to tell us when to start calculating depreciation for an asset, because an asset will be placed in service on various dates of the financial year. So we talked about what the depreciation calendar is, and we said it matches the GL calendar. If the periods on your GL calendar are months, then the depreciation calendar should also be monthly. If they are quarters, it should also be, the depreciation calendar should also be quarterly. But do not have adjusting periods in your depreciation calendar. You can have adjusting periods in your GL calendar, but not in your depreciation calendar. And then we talked about prorate convention. And at the risk of sounding like a broken record, this is what it does. It tells us when to start calculating the depreciation expense based on the date placed in service. And we gave examples of conventions, and we went through examples of how they work. And then we finally say that the prorate calendar is where the system checks where the period within which the prorate date falls. Okay, and the prorate calendar can be the same as the depreciation calendar and different depending on how you want to calculate your depreciations for the first year of an asset's life. So that was a bit of a complicated lesson, but hopefully if anything is not clear, we are going to clear it up as we proceed. So Bob, unless you have something to add, we can stop there.
All right, thank you so much, Victor.